Good afternoon, everybody. Thank you for joining us today and welcome to the Trailblazer webinar called Maximising Your Assets Value. I'm your host for today, and if you do not know me, I am Eloise Hansen. I am the editor of Boutique Hotel News. So we're an online trade publication for the global boutique, lifestyle and luxury hotel space. This webinar series, we've taken on a couple of sponsors and we're going to be playing some short videos to introduce our sponsors, the first of which is Cvent, a meetings and event technology company. To run you through briefly some webinar guidelines, we're going to spend around 45 minutes in discussion today, followed by some time at the end to take any questions from the floor. So if you do have any questions for any of our panelists today, please submit these using the Q&A function at the bottom of your screen, and I will get round to asking these questions as and when. As a gentle reminder, this session is also being recorded and every single registrant will automatically receive a copy of that replay within a few days. A second sponsor for today is Duve. They are a guest engagement platform. And once again, we have a short video to play for you today. And if you would like to find out further information about Cvent or Duve, the websites and company details have been popped into the chat for you. So let's meet our Trailblazers. We're going to move from left to right as per your PowerPoint slides here. And I'm going to ask each to introduce themselves briefly. So Markus, I'm coming to you first, my friend. How are you?
Hello, everyone. Very good. Thank you very much, Eloise. I'm Markus, CEO of likeMagic. likeMagic is a one-stop shop digital hospitality platform that we have developed for our own service apartment brand. And then we basically realized this thing is way too good to keep to ourselves. So we basically now offer it to everyone. You know, it's a solution for basically guests, employees, and operators from one hand.
Brilliant. Thank you, Markus. And Shaun, coming to you next, please.
Hi, Eloise. Hi, everybody. I'm Shaun Talbot. I'm Senior Director at Virgin Money, formerly known as Clydesdale Bank. So you'll see more of the Virgin Money brand come through. Operate out of central London, but we have a UK-wide remit in terms of funding hotel and service department projects. I'm the finance guy on the panel, so look forward to any finance questions.
Brilliant. Thanks a lot, Shaun. And last but not least, Andrew.
Hi, Eloise, and hi, everyone. My name's Andrew Robb. I'm the CFO and Head of Development for RBH. RBH is a UK third-party management company operating 50 hotels across the UK with about 20 different ownership groups. Hotels ranging from limited service to – 'luxury' end of the market and across the UK geographically.
Thank you, Andrew. And I'm going to apologise on behalf of Javier Bassel. Unfortunately, he's had an emergency and can no longer join this webinar, but I will certainly find time to be catching up with him at a later date. So stay tuned if you would like to hear from Javier later on. But for now, I'm going to run through some context slides. This is something that I always like to do prior to heading into our main conversation today. These screen grabs on your screens at the moment are all some stories that has been published on Boutique Hotels News recently. And this top left-hand story is a Q3 report from Lodging Econometrics, I believe, which has revealed that hotel conversions across Europe stand at an all-time high of 324 hotels, comprising about 47,000 rooms. And the report also notes that hotel renovations are on the rise, with 150 hotels being counted in Europe in Q3. Now, this report was released around the same time when luxury fashion brand Louis Vuitton announced that it's going to transform its corporate office in Paris into a mixed-use site. And this site is going to include the brand's first hotel and its largest store worldwide. And Michael Burke, who's the CEO of Louis Vuitton, said, quote, "My office is not going to be my office within 5 years, that's for sure. There's better uses, more contemporary uses for it than a corporate office." Now, on the next slide, and building off those two stories, a recent JLL survey found that 80% of hotel investors are targeting value-add opportunities in the sector, preferring to sign projects that have refurbishment, repositioning, or rebranding potential. And there are design firms such as London-based Tonic Associates, which have actually launched new arms of the business to ensure that hotels can maximize their value. So, for example, the team at Tonic has launched what they call a lobby activation initiative to help hoteliers optimize excess space. And the design firm is even moving into branded real estate. So there's lots happening in the space, lots to be excited about despite the headwinds that we are facing at the moment. So let's talk about maximizing your assets value. And I would like to kick off with a question to Andrew, if you don't mind. Andrew, can you share some of the steps that RBH has taken to protect its profit margin?
I assume when you say profit margins, you mean are the hotels that we operate as opposed to the management company itself, yeah, given that's what everyone's on here for. I think there's numerous steps that we've been taking, and it's not a new thing for us to be focused on profit. Obviously, that's what we do and have done for a while. I think in terms of the current situation that we've been in and recovery, it's been all about growing that top line as the first and biggest benefit that we can bring. We've seen huge growth in the revenue, and thankfully at the moment don't see that slowing down much. As I was wondering how many times the word headwind would pop up. I've got one on the list already, but much as we are facing some of those, we're not seeing any slowdown in business on the books or booking pace. Anything that we are tracking and reporting on is ahead of or at the lowest levels in line with sort of 2019 levels in booking pace. So we're seeing that continue to be positive, which is really good. And from us internally, we obviously report on market share in individual hotels and also across the group as a whole. And what we have seen sort of coming out of COVID sort of now versus sort of pre-COVID times is that our average market share in our group has increased by about 2.5 basis points, which is a big shift in that. So that's one of the biggest things that we've done, is trying to drive that top line. And I think, to be fair to others in the industry as well, that's consistently what people have been doing, and that focus on growing particularly average room rate to help grow the profit margin at the bottom. But we are looking everywhere that we can in the market. We don't we don't think there's anywhere that shouldn't be looked at in the P&L. Everyone has had pressure on particularly payroll costs, and we've seen that across the board. We've also seen that at times over the last 12, 18 months, people were struggling for staff. So really been focusing on retention as much as anything else, and making sure that people want to stay and develop with us, because I think ultimately that in the long term is the right thing to do. And I think generally that's been our mindset. It's focusing on the right long-term decisions. Obviously, each of our owners has different investment horizons, but trying to make sure that, unless otherwise instructed, we're looking at long-term asset value and the right decisions in the long term, and not trying as best as possible to take sort of impulsive decisions which might have a short-term benefit but not be the right thing in the long term.
Every year at Boutique Hotel News, we write our predicted trends as to what we think is going to shape the hotel sector next year. And moving into 2022, I thought that the S in ESG was going to become amplified. And I don't think we've seen anything quite like it in this year when it comes to looking at such things as staff, trying to become more pushing that green agenda, I suppose, higher up on the priority list, looking at your suppliers, maybe perhaps shortening that supply chain and becoming more local. So I'm quite glad to hear that you mentioned the labour front in your answer there, Andrew. Would you be able to talk more about how you're adding value to RBH's portfolio?
Yeah, I mean, I think there's numerous areas where we add value, or certainly we feel that we add value. I think at the moment, what we're adding value on predominantly is, as I mentioned, around growing that top line and the sales support that we're giving there. But in recent months, a lot of our owners have been given quite positive feedback about where we're adding value on the capital side of the business as well. So in particular, I know it will likely come up, that comes up in most discussions recently. We'll chat a little bit about ESG, but we've been doing a lot of work with our new energy broker, who recently changed energy broker there to someone with a bit more depth and agility in that space. So we're working with a new broker there, and be looking at a lot of projects with our capital team about where we can add value on reducing energy consumption, and obviously at the moment with prices as they are, the payback on some of these initiatives has been significantly improved from where it was previously. So really trying to add value across the board. Guest satisfaction, I think, again, is something everyone looks at in hotels, but we had a session last week with our owners, and a session which one of our partners was presenting around guest satisfaction and sort of how we've been improving generally within there. We've improved our ranking amongst our competitors significantly, and sort of very close to top spot in that, and also linking that guest satisfaction scoring and the importance of that through to revenue. I think it's something that people don't necessarily notice a correlation between, but we've been seeing quite a lot of that internally, and the session last week was also sort of reiterating that with some external data as well. So it's really across the board. I can't pinpoint one specific area, because I think we feel that that's what we do as a business, is add value across the board.
Mm-hmm. Thanks, Andrew. Shaun, I'd like to come to you next, please, to talk more about the rebound, I suppose, of UK cities. I was at a Deloitte conference fairly recently, and I know anecdotally that Paris, for example, I believe is due to hit full recovery by the end of this year. I think it's going to be one of the major cities that has made such a fantastic bounce back. And Virgin Money, I believe, is quite hot at focusing on those gateway cities, those urban markets. So which UK cities are actually showing promising signs of activity? And are you finding more opportunities in acquiring trading hotels, or is it funding those new developments? So there's quite a lot in that question. So we'll break it down bit by bit.
I thought for an awful minute you were going to take me to Paris to start with, so I'm glad you reined it back to UK, so that I can sit comfortably now. I think in terms of, as we basically within Virgin Money, we have a portfolio of clients who have assets across the country, but equally there is a focus for the business, and there has been certainly for the last 4 or 5 years as the book has continued to grow, and it is, as you've alluded to, it sits within the gateway cities. And I think if you, Andrew will also have a view on this, I'm sure, but London took quite a big hit, obviously through COVID, but equally has rebounded pretty quickly for the reasons that Andrew's alluded to, in terms of rate has been able to return, and has been yielded very well. Occupancy is recovering. On business on our books, Edinburgh is absolutely flying, and I think that's a real strong result, as with London, of the return of inbound tourism from certain markets. I'm sure our hoteliers, as we speak to them, and say, Andrew will have a greater hold on this. It's not every market, but the US dollar appears to be back in these key cities, and there's certainly key cities to where we are, where we have our assets and where we're funding work with our owners. I think outside of that, and again, you've got a similar trend. Oxford is doing really well. I think Bath probably didn't do as well through the summer as I think some of the owners down in Bath would have liked, but again has still benefited from return of, and some of these other markets have got some of that staycation element too. So I think across the piece there are a significant number of markets that have rebounded post-COVID. Those that have got stronger inbound tourist related guests, I think, are coming back even harder and stronger. So I think that's key from our side, and as we continue to track our portfolio, where we obviously look at covenants once a quarter on most of our lends, so we get to see that data.
Thanks for that overview, Shaun. And let's take on that second part of that question about the opportunities for lending. Are you finding that with more acquiring those existing assets, or is it funding the new developments?
I think anybody who's listening into this webinar, if I said that doing new development out of the ground is easy, would be onto me like a shot. So new development is a really tough place to be at this present point in time. Projects that are in the ground are moving through, and will continue to do so. I'm sure as it works through. So it will take time. You touched on, we will return to Paris, the conversion of the offices. I think that's where there will continue to potentially be some additional product brought into the market through that conversion side. Acquisition, again, we're pretty strong in that side. So again, if a project and a property is in the right markets, it's certainly something that we as a lender would look to fund. And I'm sure many of my fellow lenders out in the market. So nothing is off limits, and it will come down to the really key fundamentals of where is it, what is it, and who is it. And that's how we lend and how many will work through, and how the sector is built up through that period of time.
Would you be able to sorry, were you about to jump in here, Andrew?
Please
go ahead.
Sorry. No, I was going to say, I think that's reflective of what we're seeing as well, with opportunities. A lot of the hotels that we've taken on in the most recent past have been independent or sort of unbranded hotels, but some of those are absolutely with a view of adding a brand or repositioning or refurbishing. So that's consistent with what we're seeing, and I think most of the global brands as well in terms of their development. Most of what they're forecasting to be in next year's pipeline is around that conversion or sort of softer branding rather than necessarily the ground up developments that are challenging to stack up and have a level of certainty on the costs on.
Thanks, Shaun. Thanks, Andrew. Let's bring Markus into the conversation here as our tech, I was about to say tech head that's on the panel here, but that doesn't sound quite the right term to introduce you, Markus. But as our tech partner, what are those commercial benefits and the cost savings that can be achieved when a hotelier can invest in that right technology?
Thank you, Eloise. I think first of all, I think there's many benefits you can actually harvest, but I think one of the key questions is you need to do it in the right way. And a very simple question that I get often asked when we actually now pitch our solution, we use our solution to run our own hotels as well, a very simple question they ask me, does it work? So, and I think now to your questions, let's split it up in sort of like the guest side of things, and then the employee side of things, because I think there's great opportunities at both ends, On the guest side of things, I think this is obvious, direct bookings, yes, you have a very intuitive booking engine, but how well is your booking engine integrated into your digital journey? Does it break? Is it seamless? I think what you would expect, and I think that's our experience, now basically using it, living it, is returning guests. They don't want to enter the data twice. They're giving it to you once. So if they come back, you recognize them, and they basically click in, they check in with one click. It sounds very simple. That's what we call seamlessness, And then I think the other thing is then I think that plays into that and basically increases your direct booking rate, is really people do not want to download an app. You just know this, they don't want to download an app, it needs to be simple. So it needs to be a progressive level. So I think that's sort of the first bit, it plays on the revenue side. Now let's go to the efficiency. I think if you actually go from booking, entry, basically checking in whenever you want to do it, being it 30 days before, 60 days before, you just do it whenever you want it as a guest. You enter the building, you enter your room, and you leave again, So we actually combine the entire journey, This has massive efficiency potential. And yes, not every brand can actually go all the way, but you can actually take bits and pieces. And just to put this into numbers, and that's the great thing if you basically eat your own dog food, So we basically know what you can achieve by that, 95% of our guests, they do a self-checking checkout. So there's no manual interaction there. I think as a brand, you can then decide, do I actually want staff on site? You need to offer support, it doesn't go staffless. I think that's sort of some of the illusions, because stuff happens when you work with technology. So it's so essential when something doesn't work, you can help immediately. But then I think some of our, as us, but also some of our clients, they decide basically we want, even though guests are fairly digital, they want to keep that human touch, They want that someone is there and basically greets the guests, but they really have time then. These employees have time to spend time with their guests, and not filling in useless paper stuff, So I think that's sort of the one thing. So I think there's really, it's a great opportunity for efficiency. And if you combine it with a high satisfaction, so that you just only mandate the solution, you actually make it intuitive. So I think then it's really, there's a great opportunity for efficiency. And then going back to revenues, once you have your guests on that journey, obviously you can offer them throughout the phases in a smart way, services. And I think you can even, and this is not fiction, this is actually, it happens, it can be simple. You can combine them with access points, for example, to the gym, to the spa, and it has a price. It can all be done, and it's nothing. It's fairly straightforward. So you actually go from revenue efficiency to revenue again. So I think this is really the guest side of things. And let me just a couple of words about the employee side, because this is so important. I'm new to hospitality. I worked for 20 years in financial services. So when I came to hospitality 2 years ago, I actually sat down with employees and I looked how they actually work. They use 7, 8, 9 screens. Now think about it, if you take your guest digital 24/7, you let your people work like this, you invest a lot of money into technology, and then at the end of the day, you even need more people. So I think technology offers you a great opportunity to consolidate, to make it intuitive and easier for your workforce to work with. So our aim is really one solution where you can do 80 to 90% of your job. This is actually, it's a huge productivity booster. It lets you allow to train people much faster, not only to keep the people, they actually have more fun with it, but also when you actually need to hire new people, it offers you much more possibilities, of actually finding people. They can be trained fairly quickly, So I think that these are sort of the opportunities that we see, the experience that we see with us ourselves, but also with our clients. Something I haven't touched on, obviously, is revenue management. It's not really my area of expertise. Also, very great concepts out there, either cool software that you can actually use. And there are even people out there who actually do it for you. So it's really a matter of how you want to do it. But this is really not my area of expertise. But I think if you do it in the right way, if you do it in the right way, I think there's both opportunities on the efficiency, but also on the revenue side of things.
Mm-hmm. If you were to take the hotel tech stack as it is at the moment, and you had to highlight an area that has the greatest potential for that value creation, what would it be and why?
That's a very good question, Eloise. I think it's not a single component. It's not a single component. It's basically how you orchestrate and how you put these components together, being it from booking, digital journey, the employee solution, and then you build a foundation of data. You build a foundation of guest profiles. When you do it in that way, and it's not easy. It's really not easy. Coming from the credit card space, I know how difficult it is to build up this thing, but it is possible. Then at the same time, you actually play with revenues and efficiency, just as I explained before, So I don't think no longer, because we will talk about the whole energy consumption and all this thing afterwards, but systems are getting more complex, That's why I think you cannot only focus on one element, but it's really the art of how you bring them together and how you can actually then use them.
Mm-hmm. Brilliant. Thanks, Markus. I've just seen a reminder in the chat here. If anybody has any questions for any of our speakers, please pop these either into the chat here or using the Q&A function, and I will get round to these at the end. Andrew, I'm coming back to you for my next question, please. What are hotel owners now looking for in their choice of operating partner?
Like you said now, I don't think what they're looking for now is any different to what they've looked at previously. I mean, most of those we work with want you to be a partner. People have different views as to what that means, whether you're commercially aligned or culturally aligned. But I think the partnership is key. So I think any relationship that you're building there, they want to feel that you're on the same journey as them, or that you understand their journey and can add value along that way. And I think that's important. We've got some owners who are very long-term owners, and therefore have different criteria to someone who's maybe a private equity fund with a 3 to 5 year window. So being able to make sure that we can adapt our service or the ideas that we bring to them about investment in their hotels to mirror their own criteria is important. I think it's also about making sure that we can demonstrate a track record. So if it's for example, it's a central London development, then we can show them our track record in London. If it's Edinburgh, we can show them our track record in Edinburgh, and we can go through that and show in the past where we've added value, references, reputation, etc. that we've got. So It's a real mix, but I think the big thing for me is make sure it's a partnership where you can both see that you're adding value to each other on that.
Mm-hmm. Are you seeing that ESG criteria enter management agreements? And if so, how is that influencing or reshaping your strategy?
Well, as I'm sure most people on the panel or in the attendees will say, ESG is everywhere. So from our point of view, there's a lot of what we have done at RBH for many years, we feel has been in a lot of these areas. Obviously, it's gone through various different guises. There was CSR, and then environmental came a bit more, and now it's ESG, but really everyone just talks about the E, which frustrates me a little bit. But there's lots of things that we've been doing in all of those areas for many years. A couple of years ago, we took the work that we were doing into what we refer to as our Giving Something Back program, which focuses on giving back to our people, community, and environments. Mm-hmm. And there's huge amounts of work going into all of those areas. As an industry, I think we're a long way from having any sort of standardization of approach, although there are various different platforms that we also participate in that are helping to shape that. So, for example, we sit as part of the technical committee of the Energy Environmental Alliance, which focuses on that sort of government legislation piece and feeding into what that should look like and how it should be measured, etc. So there's various platforms like that which we are sort of contributing to at an industry level, and also representing on other panels. So our managing director Susan chairs IHG's Global Sustainability Committee, so focusing there on sort of a wider piece. So a lot of those things where we're adding value to an industry-wide discussion, but internally we're doing a lot around energy consumption and seeing if we can reduce that. We've also incorporated our Giving Something Back into our core metrics, which our general managers are incentivized and bonused on. So not only are they looking at sort of the fundamentals of hotel performance around guest satisfaction, market share, and profitability, but they're also now being measured on what they're doing in our Giving Something Back areas, which I think is a key part of making sure that everyone's motivated on the same journey. But to answer the specific of your question in terms of management agreements, I don't think yet that there's any significant shift in terms of wording around ESG. Part of that is driven not necessarily by the intention of both parties, but just that there's not enough guidance or industry-wide measurement criteria in place to really drive that. So I think we need that to be the trigger first before we get into the wording of contracts. Mm-hmm. But what we have had recently is our first contract, which had specific ESG wording, but it was more wording around the intentions of both parties and the areas that we're going to work collaboratively on, as well as sort of acknowledging that there were going to be reporting requirements, which at the moment we could define, but they may change over the coming years and months, that we'll work together on. So it was more of a sort of boundaries of working relationship and show the intention of both parties. So I think we'll see a bit more of that to make sure that owners and operators are then aligned on those areas, that they're working towards something, but we're not quite there to get to the specific wordings.
Mm-hmm. Do you think, Andrew, that this the shift in ESG has come from nice to have to like the must have, and do you feel that it is setting, I suppose, RBH apart in terms of a prospective potential partner for your hotel?
I think it definitely has moved from a nice to have to a need to have, and in order to make that shift, it's really been driven by the consumer. So guests are looking for that, particularly around corporate RFP proposals that are coming in or we've been asked to submit for, it's asking in a lot of detail there what hotels are doing, and therefore if you're not doing something, you're potentially losing out on business. In terms of RBH, I think we like to think that we're probably slightly ahead of the curve, but I don't see that this is an area where there's going to be one versus the other. I think everyone is going to have to be at the races in this. So I think, could we potentially be ahead of the curve just now? I think possibly we are, but will that be an advantage long term? I don't think so, and I don't really think it's an area where we necessarily want to be ahead of everyone. We'd kind of like everyone to be improving, otherwise there's not really a point in it. But I think it's going to be driven, and Shaun might touch this as well, but it's also going to be driven from transactions. We've seen it to a small extent over the last 6 to 12 months, but more and more, particularly on the energy side and the environmental side, we're seeing that being a factor in deals that are progressing or not progressing, or price chips, etc. And really, I think as soon as investors are seeing that being a factor, then it's becoming much more of a focus for them, and therefore it will be for everyone else.
Why don't we move to Shaun for my next question? Shaun, what role does ESG play in your lending criteria?
I think if I'm honest, it actually, at the moment, is quite a small part. And I think that's one of the challenges. And, Andrew's just alluded to it. I think the momentum had started probably pre-COVID. And I think certainly within the lender segment, the emphasis came off. It is now back on the agenda. And I think part of that is driven by timelines. Suddenly people have looked up, smelt the coffee, and some of these timelines are coming in really quite hard and fast. So I think it's then how the sectors, so finance specific, and then into how that feeds into the hospitality sector, actually react to these ever decreasing timelines if we are to achieve or get close to some of the measurements that are actually needed. So I think, and without the fear of incurring the wrath of Andrew, environment probably is the soft target, isn't it? Because it's physical, it's tangible. People can see it be it in the news. But if I bring it back to our side of things, it's around the property. So there's a great deal of effort going in at the moment around what do our assets on our books actually look like. And I think that's where all the lenders, I'm sure, are focused. Is, well, what do we own? Not own, sorry, apology. What do we fund? Where does it sit within the curve? And when does it become effectively obsolete? And imagine that is across some. Those are massive figures and massive portfolios of real estate. And this isn't just hospitality. This is all security in terms of the lender. So it's a huge piece of work, which is why I think perhaps it's been put in the daunting bucket, but it needs to actually be done. And that work is now starting. So in the last 12 months, we are specifically required to comment within all of our new lending applications and all of our existing application, what's the client's policy around ESG? How are they dealing with it? How are they targeting it? And that can be all encompassing from Andrew's point around utility costs, which is obviously very, very high on the list of pieces, to if you have a property that currently has an EPC rating of say CD, how do you get to become a B? Whatever B actually relates to and comes across. So I think all of that element will continue to gather momentum. I think, as I say, ultimately, I think the lending industry is behind. There are green loans out there, but again, this is perhaps at a generic, at a personal level, I don't see them being attractive enough to cover the expenditure that's required to improve these properties, or as a great enough benefit. So until there's a switch in the sector and the industry as a whole, I don't see that being a great point. But fundamentally, there is some catch up, and that catch up is going to come quite quickly. You know, Andrew alluded to the Energy and Environment Alliance. I think, you know, the work that Ifeabrahim's doing to bring that to the fore is really important. Say RBH, I know, as I say, through Susan and the IHG link, bringing it to the fore, and the more that actually happens, the more it will be discussed on formats and forums like this. I was actually introduced to something completely new last week called the energy usage intensity model, which essentially is kilowatt hours by your net internal area. And then through a risk assessment tool, which sits within, and they're going to have to read this, the Carbon Risk Real Estate Monitor, so CRREM. You can effectively take your building, you look at your kilowatt hours, net internal area, and that will give you a rating. If you then go into the tool, that will then tell you where you are in the scale, and that will then frighten you intensely, because that will tell you what you need to achieve to get to 2050. So it's that sort of thing is becoming more aware, and I think as owners, funders, operators such as Andrew get to see this, the momentum will gather. It's got to, especially if we're to get anywhere near these targets. And I think off a slow start is going to grow momentum.
It is, you mentioned daunting there. I think that is the right word for a lot of people. It's just a lot of people are in this sort of, where do I start category, because it's just such a huge area. I think the best thing is to start and just think about it. There's probably quite a lot that you can, if you're individual owner operators, there's quite a lot that you can get from just a little bit of research about areas to focus on. Obviously there's a number of sort of basics, I'll call it, things like LED lighting and things like that we've probably been talking about for 15-20 years, but the payback on that is quite strong. So there's smaller steps you can do there, but just actually interrogating your energy consumption a bit and seeing, I don't know, we've just been looking recently at some of our hotels on sort of half hour by half hour throughout the day, and just understanding where the spikes are, and do we understand why the spikes in energy consumption are there, and what could be done to reduce that, or is it in line with what we'd have expected? So there's small things you can do just to start, but it is a difficult area, and trying to measure is difficult as well, because we were, as I say, when we implemented our Give on the Bias sort of 12-18 months ago, we were trying to measure sort of how we're doing each of those areas, and a lot of things that we were doing and felt we're actually really strong on, but maybe the measurement element wasn't quite there. Therefore, to actually score well in that area from a sort of external assessment was difficult. So now we've sort of thought about that, considered it, and put some various steps in, but in terms of coming to some report or some external measurement of how you're doing, it's not simple.
I thought, Andrew, to be honest, that's why the EUI measurement was actually quite good, because fundamentally within your utility cost, there's quite an easy way of seeing your kilowatt hours. Yeah. There's a relatively easy way of measuring your building internal area, and that as long as the benchmarks are set, that gives you a number, and it's quite tangible, as you said, rather than trying to work out.
Yeah, but then I suppose it doesn't differentiate between, are you a new build or are you an existing building? So you might have the same net internal area, but you'd be a very different building, or.
But the score will differentiate it. So
okay.
So if you are using, say, 200 kilowatt hours for the same sized building, and the modern building is only using 100 kilowatt hours, you get a better score. Yeah. So it's where you sit in the table.
Yeah, no, that's very relevant. I think that's the issue. There's probably multiple different ways of measuring things which are all relevant, and you can argue different ones are better than others or more appropriate than others and things. And that's the challenge, is that there's so much. So I think what we've tried to do is focus on our own internal targets around sort of improving consumption levels or hit particular metrics. We've also focused working with Green Tourism on sort of accreditation there, which are only a sort of UK accreditation. They don't go out with UK, but trying to make sure that we're following some sort of framework around improvement there until we get to a position where the EEA and government come up with, this is how you'll be measured. And hopefully by the time we come to that point, we've done all the right things and therefore measure well. But yeah, there's no right or wrong answers to what you're measuring on. I think it's just as long as you are measuring something and saying ways to improve your measurement, whatever that measurement be.
It seems like the general consensus thus far has been, you just need to start. I think you must have mentioned this, Andrew, and I could see Shaun and Marcus's head just nodding along in agreement. Markus, how can the right tech partner support that journey, support a hotelier's green agenda?
Yeah, look, it's a very good question, Eloise. I think Andrew just pointed out, I think stuff is being done, you know. I think you can measure. I think what now is sort of the next sort of the technology that we're seeing and also started working with, and it's really early stage for us. You get a lot more data. And I think obviously this is much easier if you have a new build, because if you actually want to do that in-room control, you know, being it electricity, being water, being all that stuff that actually happens in a room, that lets you allow to collect a lot more data, you know, I think it requires quite a bit of installation. So I think that the players we're talking to, the tech players, that's not us, you know, but the players we actually work with, they say, hey, look, a new build is always a lot easier, but our challenge is, how do we actually get this stuff into existing buildings, you know? But I think on the new build side, I think we're fortunate enough to actually doing something like that, you know. I think what this offers you then, you know, you can actually, again, on the guest side of things, first of all, you can be transparent, you know, you actually can show it to them, you know, again, in the journey. We even done some prototypes with that. You do some gamification. So you actually run some sustainability challenges in your hotel or in your properties, and then you incentivize. So I think it was interesting when we actually prototyped this 2 years ago, people were actually quite skeptics, you know, because they say, oh, this is my data and what actually happens to that. But I think, again, if you do it in the right way, if it actually fits to your brand, that is so important, you know, I think it could be a really good start, you know, to actually make people aware of what's going on. And then on the other side, on the operator side, it's all about getting additional data points to actually run your buildings, you know, in a much more efficient way. And you can do predictions, you know, based on past data. But I think the big challenge I actually see here, you know, I think it's really, how do you actually get additional data, and how do you actually put that tech into your building to actually realize that? And I think that's sort of like the big question, you know. I think there's definitely opportunities out there, but I think let's see what happens at that end.
Thanks, Markus. We're fast approaching our almost allotted hour, so I'm going to ask a final call to the audience. If you have any questions, do pop these into the chat and the Q&A function. But I've just got a couple of questions that I would like to finish up on, and I'm coming to Shaun for my next couple. Shaun, I asked you earlier about what role does the ESG play in your lending criteria. What role does a hotel brand play in your lending criteria? What is the value of a hotel brand from a lender's point of view?
I think certainly from our side, and I think through a significant number of the lenders, it's one part of the overall mix. So we touched around before, location, product, limited service, full service. The brand is, for me, is part of that mix. There is, you know, in certain circumstances, then we would always look at having a brand in situ, and that adds value. Likewise, if Andrew and RBH are in situ, that adds value as part of our credit risk assessment, versus somebody where potentially there is no significant experience in the background, etc., etc. So brand is, for us, is part of a mix. again, we tend to work in those larger markets. So it's quite easy to prove and quite easy to look through. That's not to say that we won't look at unbranded assets, because again, it becomes part of that mix. If a property can work in its own right without the requirement of a brand, and again through an efficient operator, and in the right markets, then that's something that we'll consider. So I think it's dangerous to say one size fits all. We will probably look at something a little bit harder if it is unbranded than if it is branded, and we know that there's a loyalty scheme that's sitting behind it. It's got a greater global reach in terms of that market. But what is it? So it's just part of the mix. So it's not the be all and end all. But if it's not there, we'll need to understand why, and effectively, why will the business or why will that hotel or service department work well without the brand? And we'll listen to the conversations.
Probably same things as we would look at, as well as if you don't have a brand, then maybe some of those other areas that you mentioned, Shaun, need to be stronger to compensate. So you might have a brand, but are you the best location in the city? Therefore, that's a tick that's maybe strengthening your position there. Or otherwise, if the driver of your business is weddings, then actually maybe a brand might be a detractor and on that versus an independent hotel where that might be more successful. So it maybe just changes the influence or weighting of some of the other areas.
Yeah, 100%, Andrew. Because I think it's quite a dangerous route to go down, that a brand therefore makes something work. That's not how it is. And I think that the brands will agree they need to bring something to the party to make it work as well. And we're all after effectively efficiency and for the property to do well, be it through the owner, the funder, or an investor even.
Shaun, why do you think luxury is a safe bet? I've heard it mentioned in conversations quite a lot recently. I think Andrew highlighted the rate recovery that has been driving the hotel recovery, of which luxury hotels have certainly been at the forefront of this. Is it just about the rate recovery? What is it about luxury hotels that are appealing?
Well, I must say I love a luxury hotel, so therefore there is great appeal to a luxury hotel, isn't there? Let's be brutally honest. I think at a practical level, where the world has been through a very strange period in recent time. So just as we all thought we were starting to get back on our feet, and certainly here within the UK, that the spectre of cost of living rise comes through. We've heard about through Andrew and his experience rate increases. We've seen it through our portfolio as well. It has to be brutally honest that luxury appeals to those with money, and if the people with money are able to pay the rates and want to travel, they will pay the rates. And I think that's that differentiator that we've actually seen and probably will continue to see in the short term. The counter to that nearly is through the limited service and economy range. There's a flight to either end. Those that are looking for value, and those that, without wishing to be flippant, then cost is not relevant. It's the experience, and we can probably all go there occasionally, and some people will do that a lot. And I think that's where it goes. And I think the caution piece sits within that middle ground. So there probably is no safe bets, but I think if you are at either end of the scale, you carry some protection. So I'm going to defer to Andrew as well, because he will have properties across that spectre. But that's it from me. I think if people have money to spend, they will spend it. And again, if a hotel is in the right location, then people will visit, and that's how and the rate increases have actually been sustained through that period of time. Whether it can be sustained through 2023, you know, we'll all wait to see what the budgets look like as they're coming through, and then what reality looks like beyond that. So yeah, so for me, no safe bets, but either end of the spectrum, I think, is where an element of protection actually lies.
Yeah. Okay.
I'd agree. I think that's exactly the case. We've still seen strong rate growth in the limited service end of the market. So it's not that they've not seen growth, some fantastic growth through there, but I think that's where at the moment people seem to be focusing on it either extremes of the market. But I think in all of these things, in reality, we go through these cycles regularly where something is sort of the desired area, and then a while later it's not, and it's something else. I remember a few years ago, most of the private equity funds running from resort locations and not wanting to touch some of the barge pole, and right now they seem to be flavor of the day, and everyone's rushing to Spain and Portugal and looking at resort locations over there. So we do go through these cycles. There is no right answer. You can't broad brush luxury across the board, but you can maybe look at luxury in certain markets, or luxury doesn't work everywhere, and neither does all other asset ranges and classes. So
brilliant. No, thanks, Andrew, and thanks, Shaun, for taking those last two questions from me. And I'll say thanks, Marcus, again, because we are right at the end of our webinar now. I've just got some closing slides to show you all before I bid you farewell on the rest of your days. And I'll flag here that our webinar the session is going to stay open for an extra 2 minutes for our audience to follow up on any of the links that we've popped into the chat there. But I will flag my final webinar of the year is going to be held on December the 12th. Effectively, this is a 45-minute session where I am going to be presenting my 6 key trends, which I think are going to shape the hotel industry next year. 3 of these trends, I will be hosting a short Q&A with an industry expert. If you would like to register and get the exclusive, please register following the link that's been popped into the chat there. And you can see a couple of teasers on your screen about what I might be talking about, but I shan't give too much away, so you'll have to join that webinar if you would like to learn more. I'd also like to flag Recharge, which is an event that we're hosting on the 23rd and 24th of January in Lisbon next year. This is an event which we move to a different European location every year. This will be my first time in Lisbon, so super excited to come along. And as you can see on your screens here, we've got a whole host of sponsors who are going to be at that event, and it would be great to see you all there. So if you want further information about Recharge, you can click the link that's been popped into the chat there. But if you want any extra details, it might be about our in-person events, our webinar series, do get in touch with my colleague Katie. Her details are up on your screen, and I believe her email address has also been popped into the chat there. But all that's left for me to do is to say thank you. Thank you to Marcus, thank you to Shaun, thank you to Andrew for your time today. Thank you to Stephen and Do for sponsoring, and thank you to those that tuned in live. I'll bid you farewell. I will see you this time in 2 weeks on December the 12th at 2 o'clock in the afternoon. And enjoy the rest of your days. Thanks very much, guys.